We're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast, my futures family. It is Tuesday, November the 8th. My name is John Hoagland. Thanks for trusting me with your time. It's election day. I'm trying to remind myself to keep my expectations reasonable. As we know, anything can happen. And we're all going to be waiting for some of the outcomes of the elections that are going on today. And so it kind of keeps me thinking maybe more of the fireworks are going to be tonight and tomorrow when we find out some of the outcomes of some of these elections. I don't know, but I've been told we feel like these markets have no soul. As always, we're focused on context, good risk management, and patience in these markets this morning. There's no major economic numbers due out today, just the fact that it is election day. However, we do have a biggie later on in the week with the CPI numbers coming out on Thursday. So a lot of expectations, a lot of probably heightened expectations, but we're going to have to, I think, remain a little bit patient. The U.S. index futures all set to open higher on a big day politically, but again, no real economic or market data to depend on. Make sure you get out and vote. That's one thing we can do for sure today. Apparently, Facebook is expected to make some sizable job cuts this week, a sharp slowdown in revenue growth is the cause of that. Meta stock trading actually higher on this news. Crude price is steady this week after last week's push higher on perhaps relaxed Chinese COVID restrictions. And so we've got, the big news of the day is, of course, the elections, and we're not going to find out until probably, and more for sure, till way after the regular hours close today. So again, start trying to stay patient, keeping my expectations reasonable, and trading what I see. We're going to check out the charts shortly here. Checking out the VIX this morning. It's up just slightly at 24.52, not a big number. The dollar index also up a little bit at 110.41. And the yield on the 10-year up slightly again, 4.19%. Make sure you hit that lucky like button, share, comment, question, feedback, heckling, and love are all welcome here on the Market Forecast. Make sure you subscribe to our YouTube channel so you get notified when we do go live. Good morning, everybody. Murph is the first in the room. Murph wins the prize this morning. Scott saw and he conquered. Eric Hill, Theo, good morning. Caprice the Rooster, crowing. It's good to be back, Rooster. Been gone for a few days, and I do want to make sure and mention my thanks to Dan for taking care of everybody for the Market Forecast for the past few sessions. Good morning, Dimitar. Mango Ice, is it safe to trade today? It's probably safe to trade today. I don't think we're going to be seeing a lot of volatility through the markets today. Again, because we're just waiting for some of the outcomes of these elections. They're midterm elections. I'm sure we're all well aware of the ramifications of all of this, and you just got to make sure you get out and vote. I think the more fireworks will probably be tonight in the overnight session tomorrow, and then again on Thursday after the CPI numbers come out. Tom, my brother, it's good to see you. Love you. NASDAQ, good to be back. Bill, good to see you. Dan Trader, Three Lions, Marcelo. Let's see here. I got lost here. Rooster's thinking more of a range-bound day before election and inflation numbers, kind of along the ideas of what I was looking at. Joel, good morning. ZK, hey there, hi there, ho there. We're as happy as can be. MARKETHOUSE. Market House. Yes, very nice, ZK. Serenity Trader, good morning. Also saying, as they say in Chicago, vote early and vote often. Good morning, Vince. Good to see you. Glitter Sandwich Trading Research. Sarah Hall, good morning. Prayers, love, and rainbows to you. Hegel Matters, Omid Shaw, good morning. Good morning. It's good to be back, Sarah. Thank you very much. Feels like it's going to be a dangerous to trade day. I might just sit on my hands today. DA, I mean, we never really know what the day is gonna bring us, right? As we always say on the market forecast, one of our acronyms is ACH. Anything can happen, and it might just be kind of a range bound day, just kind of wandering, waiting for information. Gary, Terrence, Zerain, Rusty Golfer, my spirit animal is here. Unicus, taking time off back after Thanksgiving. Before I go, one last quote and thought. A little long. That's okay. That's okay. Unicus, I'm glad that, you're going to take some time off. We're always looking to forward to taking a little bit of time off. I'm sure you're going to be excited to get back into the markets. You're taking a couple of weeks, maybe 3 weeks off, it sounds like, coming back after Thanksgiving. Have a good time. Do nice things for yourself. Do nice things for others as well. Here's the quote for the day. A diamond is the result of extreme pressure and time. Less time is crystal. Less than that is coal. Less than that is fossilized leaves. Less than that, it's just plain dirt. Successful traders are rare, like diamonds. Let the pressure and time of the market make you a diamond. Don't be plain dirt. Very good quote. Something my dad always told me was, the hardest steel comes from the hottest forge. Very similar to the idea that pressure creates the diamond or leaves it as coal or even just dirt. Great quote, Unicus. Thank you again for all of those quotes. I know we're going to miss you. We'll be looking forward to you coming back and bringing a whole new list of daily inspirations for us. We do appreciate those. We'll be thinking about you, Unicus. We'll miss you. Stephen C., good morning. Dark Kevin, good morning. Jason Lewis, Anissa, Kevin Guy, Dr. EJ, Brother Rick, love you. Scarlet Arachnid, welcome back. It's good to be back. Tyler, already in and out of the markets with my goals. Don't like pending volatility. The euro US dollar at parity, election pending, energy problem surfacing. Be cautious. Of course, Tyler. It's good to be with you and good to be with you, my friend. Brody, yo. Joe, good morning. Alejandro, cheers from Lima, Peru. It's good to know you, my first time here. Alejandro, welcome. Hopefully you're going to find some useful information every morning here on the Market Forecast. Tyler, shine bright like a diamond. There you go. There you go. So, all right. So, Alejandro, we're going to look through the crude oil, the S&Ps, the NASDAQ, the gold, the euro, the 10-year, and the natural gas. We do have Make Hogue Money today at 8:20, just after the market forecast. Looking forward to getting back to business in that regard as well. So let's take a look at these charts. Good morning, Doji. Good morning, Kevin. It's good to be back. Let's take a look at these charts and see what we see. Again, my expectations are reasonable. I'm going to be trying to stay reasonable in my expectations for the trading day today, with all of the pending information due out today and Thursday. Here's the S&Ps, the daily. So, well, we pretty decent recovery the last couple of sessions from last week's route to the downside. We added 11,000 in open interest on this push to the upside. Look at how far we are from the excess that we left back here on the 13th of October. We've had some decent moves to the upside. We've had inventory adjustments. We have information due out today. I'm again not looking for anything huge to happen, which usually means something huge is going to happen. The focus is, of course, on election and CPI on Thursday. Last week's range, we have the high of the range up here, the low of the range here. We're pretty centrally located inside that range. Make sure I got weekly kickoff on here, right? 3850's weekly kickoff high. That could be something that could incite our longer time frame traders into making adjustments in their inventory, and that is right now the closest inflection level that we do have near current price. Here's the 30-minute chart. Last week's route to the downside. Friday, we kind of recovered. Monday, kind of continued to recover. We have a double distribution trend day on Monday yesterday. So if we were to be opening between these 2 points of control, these two high volume nodes, I'd be looking more towards a repair day for yesterday. But it does appear that we're going to be opening with a gap. Now, I don't see that there's a huge amount of overnight inventory to the long side, so I'm not all that concerned about a pull back towards settlement because of overnight inventory. So if we have a gap and we can't close the gap, it just makes sense to me that we've got a naked point of control right near the weekly kickoff high here, and it seems as though that seems like a really reasonable target for an upside move today. I mean, off this low here on Thursday, we've been putting in higher highs and higher lows ever since. Now that's pretty short time frame. And again, we're waiting for information. So if we do reaccept inside value from yesterday, I believe that some repair is certainly possible, as well as the value area special situation play, which would take us basically right back down to the high volume node from the lower distribution of time and volume from yesterday. And then we've got our higher distribution of time and volume here, where the point of control is showing here on this chart. It's a little different on some of the other charts, and if you come to Make Hogue Money, you're going to see this. So we got a gap. If we can't close the gap, we look for opportunities to trade in the direction of the gap, which would have us go up for a test of this naked point of control weekly kickoff high. If we can't hold the gap and reaccept inside value, a value area special situation play could take us back down to here. What that still leaves us is an overlapping to higher range, higher high, higher low, if that's as far as we can get to the downside. Again, I'm not expecting anything huge today because of the elections. A lot of focus on what's going to happen there, of course. Let's take a look now at crude oil. So we've been in kind of a long time frame downside move since up here, longer time frame. Medium time frame, we've kind of broken this downside structure, and I believe we've fallen more into a range-bound type of situation. We're back in this area of balance that we were in from June through the beginning of September, and we're back in there now. We did have a coiling situation a couple of weeks ago. We broke out to the upside. We're range bound. Back to an upside move on Friday. Range bound. What are we doing here? Upside structure, short time frame upside structure remains. Longer time frame balance. Profit taking yesterday. We did put an overlapping to higher day in, but we lost 12,000 in open interest. Rejection, again, yesterday above last week's high. So what did we do? Why do I think this is possibly some profit taking? Because the market opened, looked above last week's high, and found sellers up there. Those sellers, I believe, in the afternoon were the ones that created pretty much all of that loss in open interest. So it looks like a little bit of profit taking on a Friday morning before a Tuesday election makes sense to me. We're opening with a gap. We've got overnight inventory to the short side. Lots of visuals down here. I did not put in this naked point of control down here. I'll do that now. We've got lots of visuals down below, including a gap that we left last week that you can see. That's that blue box here. And there now we've got our other naked point of control down here. We've got more naked points of control down there. There's lots of cleanup to do down here. Doesn't necessarily mean it has to happen today, but there is that possibility because we are opening with a gap, and if we can't close that gap, I will look for this market to travel south, if you will, like geese or like the birds, and see if we can't check this naked point of control and fill this gap, the point of control down here. That would be a substantial move, in my opinion, today. That would be a substantial move. Remember, I'm trying to remain reasonable in my expectations. We do have the API in the afternoon this afternoon, and we also have the EIA tomorrow. Who knows what the market is going to do after those come out. Take a look at the NASDAQ. All right. NASDAQ, look how much deeper the NASDAQ came on this pullback, all the way back to that excess level that we put in on the 13th. The S&Ps, I think, came down to here. The NASDAQ is presenting as so much weaker, and, you know, the tech sector's been getting whacked a lot lately, so that explains why. It continues the weakest of the equity indices. Get some recovery from last week's rout, not as deep a recovery, of course. Again, the focus is on election CPI Thursday. I think these markets are largely going to be in short time frame control. If there is longer time frame participation, I think it's going to be more towards hedging or adjusting inventories for anything that might happen tonight and or Thursday. Here's the 30-minute chart. So we do have a gap to open. Okay, double distribution trend day, just like the S&Ps yesterday, opening outside of it, brings us the potential for continuation to the upside. Only thing I really see to the upside is to go up and recheck this naked point of control. We've got last week's high above that, and we've got lots of space above to get to weekly kickoff low. So we're really just kind of hanging out in space here. Again, short time frame control. If short time frame eyes are looking at this naked point of control, they'll bring price there. If we can't close the gap, we look for opportunities to trade in the direction of the gap, which would have us looking for longs, and a reasonable expectation would be to reach this naked point of control just above here that really kind of comes in. Let's see. Let's take a closer look at it here. 1122, 11, probably about 11,230. I would stop. I would put my exit there at 11,215, probably 225 maybe, just to make sure I got my exit. That is if price does indeed go there. Again, we've got a gap open. If we can't close the gap, that has us looking for continuation to the upside. No late spike. No late spike. Now take a look at gold. So Friday's pop to the upside has everybody wondering what's going on with the metals. I read today that there was some speculation that silver could see $24 pretty soon. I know a few people that would be happy to hear that. And we're going to have to see how that plays out. Friday's breakout above balance puts us in balance. That this balance high here, the top of this box here. Remember, we kind of look at balance like from candle body highs and candle body lows. Look where the low was yesterday. Really, right at the top of these candle bodies that we look at as the area of balance. We had a 5,100 contract increase in open interest yesterday, estimated on really low volume. I'm not all that impressed with this volume, but as long as we hold yesterday's low and our overnight low today, I think this market is something I would start to looking for opportunities to buy weakness. But of course, we certainly have to keep our eye on the dollar, which is a little bit up this morning from the settlement from yesterday, but nothing tremendous. So we do want to keep an eye on the dollar. Take a look at the 30. Wow. So all that open interest increase in this little area of space. We did have some negative delta yesterday, which leads me to believe that some of that open interest increase was maybe some longer time frame traders adjusting inventory to the long side. What do we have today? Well, we've got overnight inventory to the short side that has largely been reconciled. We opened with a gap, and it appears that we've closed that gap already. So, I guess it becomes, do we find acceptance inside the range from yesterday and get closer to settlement, or do we reject range from yesterday and come back and maybe test our overnight lows, value low from Friday? I'm not in a big hurry again to get into anything that I can't limit risk. And right here, I can limit risk against yesterday's low. Let's see here. We don't really have any overnight inventory left. The market is kind of left to the whims of the short time frame traders here, it seems. Take a look at the euro. All right, euro, short time frame balance. Okay, we're kind of here. Longer time frame downside structure against a shorter time frame upside structure. Is there a potential for a market state change? I think there is always that potential, but I think we're a long ways from it, and I'm not, again, expecting it today. Volume was slow yesterday, but we did increase open interest on an up move of about 2,300 contracts. So it still seems as though traders are willing to continue to place long bets here. Last week's high is going to be somewhat pivotal here this morning, I believe. We did take out, and we closed above it, added open interest. I'd like to see last week's high hold as support. Well, so far, we're getting our wish. We have a double distribution trend day yesterday, high area of volume and time, very little volume and time, and an area of volume and time. And we're in between, or trying to get in between. So there is the potential for a repair that could take us from where we are now to the high volume node in the upper distribution. We're in range, we're in value. The possibility of repair keeps me thinking about better trade locations as the day goes on. I'm always thinking, all right, where is the best trade location going to be, and when is it going to be? Opening in range and in value usually tells me I'm going to find better trade locations as the day goes on. We have visuals everywhere. Gap, negative point of control, another negative point of control. We got settlement up here. We got value high. We got value low. There's so many visuals that we're dealing with here. We don't know which one's going to go first, which one we're going to trade to first. So be careful, be cautious. If you can't limit risk on any trade you take, think about not taking it. It's something that I tell people all the time is, if you're going to take a trade, think about where the risk is first. Where does price have to advertise to prove me wrong? And once you've established that, now you've got a good idea of where a potential cheap trade location, a cheap entry location is based on where the risk is on the trade. I don't see anything cheap right here in the euro. I would be looking for short time frame levels with some sort of day time frame structure up against them. Here's the 10-year law. Last week's low supportive yesterday. Last week's low was supportive on Friday. Last week's low supportive, I guess, a little bit in the overnight. No talking Feds today. This market seems to be awaiting new information, as well it probably should be after the FOMC from last week. It's taken a break, it seems, or as Dan calls it, it's in a hangover kind of period of time. Here's the 30-minute chart. Overnight inventory, maybe a little bit long by now, but we're already open. We've opened in range. We've opened in value. Better trade locations are likely to come as the day goes on. We got our overnight high that we've yet to test. We've got our overnight low that we're a long way from testing. We're in range. We're in value. Yesterday, we did add 19,000 in open interest. Is that short sellers? Is that traders that are going to end up being stuck short at some point? If it were me and I was short down here, I'd start to get a little bit nervous. But again, not expecting anything huge to occur throughout the session today. Here's the natural gas. So we had a weekend gap. We're working on closing that gap, which we have done in extended trading hours. We added 6,200 in open interest yesterday. We've got our weekly kickoff high now at 728. We've got our weekly kickoff low down here at 570. And we are just, this market is one of those markets that seems to have weekend gaps all the time. I believe this was a weekend gap. We had a weekend gap here that we're still working on filling in regular trading hours. Here's our range from yesterday, which we added 6,200 contracts. I'm thinking those 6,200 contracts are more on the short side than the long side. Here's our weekend gap that we've filled now in extended trading hours, but not regular trading hours. We've got a naked point of control right here that we have just checked in regular trading hours. But again, we've got lots of visuals. We got last week's high, last week's low, weekly kickoff low, another naked point of control. You know, this move through the weekend gap, I don't think is necessarily going to be viewed by daytime frame traders as a very strong level to lean upon. So we're outside range and value. The market is out of balance, coming back inside value from Friday's session. Maybe we get a move back to low of value from Friday. Not in any hurry to be too aggressive in anything that I'm going to be doing in these markets today. I'm just happy to be back with you. It's always a pleasure to have the opportunity to sit and chat with traders. One of my favorite things to do is talk trading with traders. And I'm going to get the link for Make Hogue Money for you so you can get into the Zoom room if you would like to. And you can make some of the decisions and do some of the voting. And we'll see what we can find for us and Make Hogue Money today. Here is that link. Okay. Dustin, what time do you stop your profiles on the 30-minute chart? 2:30 or 3? Do you count 3 to 3:30 as maintenance periods? In the S&Ps, I stop my volume profiles so they stop at 3 p.m. Central. That's the cash close. That's when the majority of the volume for the day is pretty much over. Sometimes there is some information that may come after 3 o'clock, especially when we're talking about earnings, which I didn't check earnings this morning. What do we have here? Well, we had Bayer this morning, DuPont, nothing tremendous. We do have Walt Disney, which that's our hey there, hi there, ho there this morning. MARKETHOUSE. It's the market house. So So Walt Disney is after the close. Nothing too tremendous, nothing too probably impactful. So, all right, let's take our deep breath and be ready for the trading day. Looking forward to seeing you for Make Hogue Money in just a few minutes. If I don't see you, trade well, and we'll see what happens at the end of the day here after with the recap. I think we should probably today be presenting a coach's playbook. I look forward to seeing you for that, and trade well. Take your deep breath. Stay humble, grateful, and creative, and be a good voter today. Make sure you get out and vote if you have not already. Vote early, vote often. I'll see you in just a few minutes for Make Hogue Money. Get out there and profit. Trade well.